Hi, Daniel. Welcome to Keep What You Earn. How are you?
Shannon, I'm doing great. Thank you so much for having me here today.
Of course, you have a really interesting and specific topic I want to talk about, especially for our listeners. And I know that you have a ton of education to share with them. And I want to start things off with just who you are, how you built your business, and tell us a bit more about your story.
Yeah, so I'm in the financial space and definitely took a different path compared to a lot of other people in the financial space. Like I didn't, go to Harvard or Stanford and get a degree in economics and work at Fidelity and Wall Street. Definitely took a different path. Got involved into sales at a young age and was in the real estate space. And this whole world of people being able to use their retirement accounts in a penalty and tax-free manner to invest in real estate, that got my wheels turning. I didn't know that people could use their retirement account to fund a business or invest in real estate. I always thought a retirement account was for, stocks and mutual funds, and that money was out of sight, out of mind. You could never touch that money until you retire. But lo and behold, there are some IRS approved ways for you to access your retirement accounts now and access that money penalty and tax free. So when I learned about that, over a decade ago, I knew that was an industry I wanted to get into. So I made some pivots, and about 7, maybe 8 years ago, I got into the space, worked for a company, definitely learned a lot by surrounding myself with people that had a lot of experience and knowledge. And then at the end of the day, sales is everywhere. Every entrepreneur listening to this right now, you probably had a sales career, or you think of yourself as, a pretty darn good salesperson because you're the face of your company. You have to lead a team. You have to generate revenue. So sales was definitely the catalyst in helping me become the business owner I am today.
Yeah, and as a fellow business owner, I know you mentioned before we hit record, you're business owner with 13 employees, I think you said, all over. Tell us
We're all in Vegas. Yeah, just
okay,
W-2 employees here in Vegas.
gotcha. Tell us what that's like in terms of managing your business and how it's grown.
You know, um, That's a loaded question because I would have a different answer pre-COVID, right?
Right,
It was
right.
it was challenging. I went from coming into the office and fist bumping my staff and looking up in the eye and seeing how they're doing, to doing Zoom calls and Google Chats, and so that was challenging. Definitely, our synergy was impacted, the culture was impacted, but we survived. I didn't have to, thank God, lay anybody off due to financial reasons. We kept chugging along, and it's real fun. We have a really good crew of people that care about what we do in terms of really making a difference in people's lives and helping them, solve some kind of problem. And having a team is where it's at, because being a business owner, you can only go so far along by yourself.
Exactly. So you mentioned earlier that your passion was educating people around this whole I don't want to call it a loophole, but kind of it's just like this unknown thing, this secret, right? That you can actually fund a business, or you can, take your money out of retirement penalty and tax free. Can you tell us more about how that actually works and why no one knows about this?
Yeah, for sure. So, a customer that always comes to mind, she left corporate, was tired of working corporate, and she left because she wanted to start an online business. And she needed about $20,000 to fund her online business, needed some inventory. She didn't want to go into debt. And we all know when you start a business, like it's pretty tough getting a loan, right? Most of the time, you're just resorting to using credit cards or your own cash. And she had money in a retirement account, and she wasn't a big fan of the stock market. So when she learned that she could access this money penalty and tax free, that really got her wheels turning. We helped her take her IRA, or I think it was a 401k from an old job at the time, and moved it into what's called a solo 401k. And the solo 401k allowed her to take out $20,000 penalty and tax free, and she used that money to fund her business. And then what's really cool about the solo 401k, when you take money out as a loan, you're just paying yourself back. So she was able to replenish her retirement account so it could keep growing. Because I think that's one big kind of reason people are avoiding their retirement accounts in terms of touching it, is because we've been conditioned to think like, don't touch your retirement. That's for retirement. Don't touch your retirement. You're going to get penalized and taxed on the money. And not all of that's true. And that's why it comes down to financial literacy and just knowing your options. And keep in mind, everyone's situation is different financially. So what works for her may not work for you, but she was able to use the solo 401k as a tool to fund her business. And she's kicking butt, taking names. She's selling a bunch of stuff on Amazon. Last time I talked to her during the pandemic, she was crushing it selling like spam and top ramen. Groceries, if you remember going to the grocery store, it was like a surreal moment. It was like the movie. And when you go to the grocery store, you're like, man, where is everything at? Like, I don't even see anything on the shelves. So I know she crushed it during that time period. So the solo 401k is a great tool for people.
Yeah. So do you recommend that, most business owners establish their own solo 401k or some type of retirement vehicle, and when to set that up in terms of their business? Because I know a lot of folks are just starting out, or they're worried about, when should I set this up? When should I be thinking about this? Do you have any advice for them?
Yeah. So, and I want to make sure I answered your other question. The big reason why, you probably have never heard of this, if you're listening
Right.
to this right now and you're just like, man, what is this guy talking about? Like, is this like legit? It is, Solo 401k is an IRS approved account. It's been around for decades. The reason why the concept of accessing your retirement account penalty and tax free isn't something that's talked a lot about is because of Wall Street. Financial advisors in Wall Street, they make money off of your money. So why would they want to endorse something and teach you something and go out of their way and show you a way to access your money, penalty and tax free, take that money out of their control? Like, that's just making them less money. And they're a business at the end of the day. They are there to represent their shareholders and make their shareholders money. So they want to drive profits, which you can't blame them, but it is what it is. That's why you haven't heard of it. But going back to your other question, I think it comes down to people's situation, and what well, how I would respond to that is, I've had plenty of people come to me and they're just like, hey, I've got $20,000. Like, which crypto should I buy? What should I invest in? And usually my first response to that is like, okay, what's your foundation look like? And what I mean by that is like, what does your debt look like? And I can't tell you, Shannon, I know you probably run into this because, I
Oh
know
yeah.
you're in the financial game. People have $20,000 in credit card debt and they're paying 20% interest. And it's like, okay, this debt is not making you money. It's costing you money. You're paying 20%. Meanwhile, you have this retirement account that's making you 8% a year. Like, what if you could access that money, your retirement account money that's making you 8% a year, take that out penalty and tax free, and pay off the credit card debt that's costing you 20%. So now instead of paying the banks, you're paying yourself back. Right. So like start there. And maybe you don't have a retirement account. Going back to, what you were saying earlier, before saving money, I would always look at your debt situation. If you can have debt that's single digit interest rates, and hopefully it's debt that's making you money, right? You're using the leverage. But if it is consumer debt and it's costing you money and it's high double digit interest rates, like find a way to pay that off first.
Mm-hmm.
And then look at saving. And there's a lot of plans that are out there. The solo 401k is one of my favorites, but the SEP IRA has some pretty high contribution limits. I think it's hard to go wrong with a Roth IRA. You can even do a Roth Solo 401k because now the money you put in, it can grow tax free. I'm a big proponent of, let's pay taxes on the seed, pay taxes one time on what you put in, but let that seed grow into a harvest. And now that money is 100% tax free. And that's what a Roth does. So,
Right. Yeah, I have a mix of both too. I'm kind of a proponent for having multiple different things to use as an approach. And I think there's a common misconception that you have to commit to one of those things. You can't have, multiple different retirement accounts or multiple different types. Like, you have to pick one. It's not the case at all, right?
yeah, for sure. I mean, you probably know more than I do because you're in the accounting world, but you might have someone that comes to you. We have clients all the time. They're like, hey, I want to contribute to my solo 401k, but I just talked to my CPA and he says I need more write-offs. I'm going to get crushed in taxes this year. So I'm going to stick $20,000 in the pre-tax side so I can get a tax write-off, right? So it's
Right.
like, just depends on your tax situation for sure. If you need more deductions or, if you're okay claiming it as income, but putting it into the Roth.
Yeah, and this goes into the importance of the client's goals, because there's conflicting priorities when you're talking to a CPA. Usually, what we're thinking about is tax minimization. That's usually our objective. So we've got the blinders on how do we get the lowest tax possible on your income. But there are financial advisors who also say, but if you, like, for example, lower someone's salary in an S corporation, that limits how much they can contribute to the sole 401k or the SEP IRA. So you have to be careful with, is your goal investment maximization, or is it salary minimization or tax minimization? So there's always this conflicting, it's like a tug of war game between me and the CFP usually, for a client, going, what is the goal? Like, tell us where to meet in the middle. Cause both
Yeah.
of us want to serve the client at the end of the day. But if left to my own devices, I assume tax minimization is the goal. So that's always where I'm pushing. So there's always a big understanding I want the client to have about your goals matter, and communicating those goals really matter.
Yeah, no one cares about your money more than you do.
Exactly.
And that's one of my favorite sayings. The problem is not a lot of people are aware of the options, and financial literacy wasn't taught in school. So many people come into this blind, right? Like, and that's why we want to serve people that, are 40, 50 years old, saved up money in a retirement account, and just never really learned a whole lot about it, but they've worked their tail off, and they, like your podcast is, they want to keep what they earn. They want to have more money in their pockets. So how can we make that happen?
Right. And you mentioned obviously the financial literacy piece, and the fact that Wall Street does not want you to know this. Banks don't want you to know this because they want the money. They don't have any incentive to have the general public understand this stuff. So they're not out to help you, they're out for their bottom line. And again, more power to them. They're a business at the end of the day. But what you have to realize is that you shouldn't rely on them to educate you, because they're going to educate you on what they want you to do that incentivizes behavior. And I think that once we unlock that programming, you realize, oh my gosh, nobody's been looking out for me but me. Really.
Yeah, I mean, that's definitely a very true statement. And it can be daunting out there. Like, there's just so much content out there. That's why it works out really good. I prefer, obviously I'm biased, working with just smaller organizations that can give more love and attention to, one-on-one type of clients, right? Not this big
Right.
financial firm with Fidelity that, you got to have 100 grand at least in your account for them to pay attention to you, but you really need to have $1 million in your account for them to, go out of their way to talk to you, right? So
Exactly.
that's another big problem.
So tell me about, just to educate the folks listening, right? So you got the solo 401k. I know you've just heard Daniel rattle off a bunch of different vehicles that you can use for retirement. And of course, these are all viable options. I want to talk about the solo 401k, and specifically heard about this thing called the self-directed solo 401k. Can you provide a little bit of color around what exactly that is, if no one's ever heard of that before?
Yeah. So like, you could call Fidelity and say, hey, I want a solo 401k. Maybe you're an entrepreneur or you want to start a business and you've got this 401k from your old job or an IRA, and you call Fidelity or Vanguard or, TD Ameritrade, and you're just like, hey, I want to move my money into a solo 401k. Can you help me? And they probably can set you up with a solo 401k. I know for sure Fidelity can. That's a solo 401k held by a Wall Street company. And that's a different type of solo 401k than the one that you just mentioned, Shannon, which is a self-directed solo 401k. And those are the type of the accounts that we set up. There's a couple big differences. One, a solo 401k with these companies like Fidelity and Vanguard and TD Ameritrade, they might not have a loan feature on the plan. And the loan feature is a game changer, because the loan feature allows you to be your own bank. Where what I mean by that is you actually can take out 50% of the account value, or $50,000, whichever number is less. You can take that money out of the plan and use it however you want. There's no IRS prohibited transactions. So you could use it to pay off personal high interest rate credit card debt. You can use it to fund a business. There's no restrictions. The caveat is you do have to pay back what you took out within 5 years to avoid the taxable event. And a lot of people love that loan feature. It's just there in their back pocket. It's there if they need it. There's no loan feature on an IRA. There's no loan feature with your 401k with your old job. There might be a loan feature with your 401k with your current job. But I know a lot of the solo 401ks that are provided by the Wall Street companies, they don't offer the loan feature. And you wonder why. They don't want people to take money out of the account penalty and tax free, right? Going back to the point that we were just talking about. So that's one big difference. Another big difference between, the solo 401k with Fidelity and a self-directed solo 401k with us is, as you just said, it's self-directed. What does self-directed mean? Well, self-directed means that the solo 401k can hold alternative assets. What does that mean? All right, well, maybe you want to invest into real estate. Maybe you want to invest into crypto. Maybe you want to invest into precious metals. Maybe you want to invest into just assets that have nothing to do with the volatility of the stock market. You can have alternative investments held in a self-directed solo 401k. So those are, really some of the main differences that are between, the different solo 401ks that are out there.
Right. And I think those listening can probably think immediately too, when you said to pay it back in 5 years, what a great way to start a business. Right.
Yeah, yeah. I mean, that's definitely an option, right? Because we don't have a lot of options when we're about to start a business. And this is where, you have to make a calculated risk, because there's risks in all investments, right? The money in your 401k or your IRA, it's at risk unless it's in cash, right? If you take money out of your retirement account penalty and tax free and you use it to fund a business, you're risking it, because if your business doesn't make money, then you just lost out, right? Because you could have left that money in the account and it could have made you money, but you also could have left that money in the account and it could have lost you money in the stock market, right? So like there's all these what ifs. That's why you just have to really look at your situation and make sure that you're making a decision that you feel like is the best.
Right. I'm also thinking that most people who want to start businesses think I don't have the capital to start, or whatever other stories they're telling to prevent themselves from getting started. And they usually blame it on not having the capital. Well, here's your excuse not to think that anymore, that you can pull it out of your, if you had a full-time job and you quit, look back at your retirement account, or, can folks move that into a self-directed solo 401k and convert?
They can, as long as they have some kind of intent, some kind of entrepreneurship activity going on. The solo 401k, just like it sounds, solo. So an entrepreneur that doesn't have any full-time W-2 employees in the picture. So, your spouse can be on W-2 payroll. You can have 1099 contractors. You just can't have full-time W-2 employees tied to the business. So if that's you, then you qualify for the solo 401k, and you can take an IRA that you've got with $100,000 in Fidelity. Or like you just said, Shannon, you quit your job and you've got 50,000 in your 401k from your old job. You could move it into a solo 401k if you are that entrepreneur that, I'm describing. Where things get a little trickier is to add new money, to make new contributions. What Shannon was saying earlier was very true. Like, you have to make sure that you have W-2 income, that you're paying yourself a salary to be able to take some of those earnings. Basically, your business has to be profitable, making you money to add more money to the account. But you can always just convert money from an old retirement account.
Right. And how you go about doing that will vary depending on what type of business entity you have, right? If you're an S Corp owner, you have W-2 income. And if you're an LLC or sole proprietor, you're just having self-employment income. So there's different thresholds or different ways to calculate this stuff depending on what type of business you have. But we help with all that stuff.
That's why you're the pro.
Exactly. That's why we do the math. We just tell you what number to put in. You write the check, right?
Yeah. There you go.
So it's easy enough. So you mentioned that the spouse can be on the plan, which I know is true too, which is like golden, which is why I say hire your spouse in your business. If you're in business, there's multiple reasons, this being one of them. Now, can the spouse also take advantage of this self-directed and the loan feature and all these things? So really the both of you together could do some damage, right?
Yeah. So, I mean, technically she could take her, $100,000 401k from her old job, move it into the solo 401k. The husband had 100,000 in an IRA with Morgan Stanley. He can move it into the solo 401k. So now they have both of their dollars in the solo 401k, but they're basically two buckets of money in the same plan, because they're separate human beings. So money can't be commingled. But because they're two separate buckets in the same plan, essentially, now they each have their own contribution limits. So depending on how much they actually pay themselves from their business, they can contribute up to $58,000 per year into the plan. So, I mean, together they can put in over $100,000 a year into the plan and get a ton of tax benefits. And then they each can take a loan from the plan. So, I mean, they each could take out 50% of their value of the account, or 50K, whichever number is less, and be their own bank. So yeah, it's a great tool.
And it's really borrowing from yourself. So you have to pay it back within 5 years. What happens if someone doesn't pay it back in full, or something goes wrong there and they don't have the money to pay it back?
I say, call Shannon. Yeah. So basically, it's a self-directed account. So, they're the sheriff. Typically they're the sheriff in town. They're the plan administrator, so technically the IRS, and I know you know this better than I do, Shannon, like they've got to make payments at least every quarter. And once they miss that, then essentially the loan is in default. So, we're just like, hey, we're not CPAs. Call Shannon, and you guys got to figure out how to claim this as income, when to claim it as income. But my understanding is whatever money they haven't paid back, they got to figure that out with their CPA, how to claim that as income. So if they took out 50,
Right.
paid back 25,000, they still have a $25,000 loan, they never paid it back, it's defaulted. They got to take that remaining number, and hopefully their CPA is as good as Shannon and they can work some magic.
Right. And when Daniel says it's income, it just means that it's no longer tax free. So now you're going to deal with as though you just pulled it out to begin with.
Yeah, like a distribution. I mean,
Right,
like that's
distribution.
now it's just a withdrawal.
Yeah, exactly. So at the end of the day, and I know a lot of people have fears around this stuff too, like you're not going to lose all of your money unless you take a massively big risk, right? You're not going to, and the penalties and the IRS and all these things, they're not going to come after you. This is a very legitimate and legal strategy that Daniel's talking about that is actually, and one thing we talk about on this podcast a lot is that the rules are there for a reason. It's just that people don't know the rules, and the rules are actually working in your favor as a business owner. There's actually incentives that the government, the Congress, they want you to be in commerce. They want you to do things like this. They want you to take advantage of them as a business owner. This is your reward for being a business owner who's savvy. So play by the rules and win the game. I always say, don't cheat to win, which people think we're doing by playing by the rules. It's just that they're fine print rules.
Yeah. And then I think we can't forget that who's Congress, right? Like, who are they? They're entrepreneurs. They got LLCs. They have S corps, right? They're the ones that are playing a role in the bills that get passed and the laws, right? They're biased. They're naturally going to say yes and get certain things passed that are going to benefit them and their families. I mean, why wouldn't they, right? So they're entrepreneurs. They're playing the game, like Shannon says, just knowing the rules and how to play the same game.
Exactly. A lot of the tax rules that you see are to advantage them because, for example, they all had to have a house in DC and where their constituents were. So having a second home is sometimes a tax advantage, depending on what strategies you're taking advantage of. But that was built because they all had second homes. So that's all where it comes from.
Yeah.
It's unreal.
Yeah. We can't hate the game. We just got to play it.
Exactly. So I know the folks listening, a lot of people's minds are blown and going, okay, I may not understand everything that they just talked about, but I'm in and I want to try this. What's the first step to get set up with a solo 401k or self-directed?
Yeah, really just what's your situation? Like if you've got this massive problem right now where you're like, oh my gosh, I've got this high interest rate credit card debt that's making me stressed out, making me feel anxious. My credit score is tanking. I really want to pay off this credit card debt and I have a retirement account. And if I could access my 401k IRA penalty and tax free to pay off my debt, like I want to talk to these guys now. Or maybe you're just like, man, this sounds cool, but like I want to learn more and kind of just dip my toe in the water. Best place is just danielblue.me. And for people that want to learn more, regardless where they're at, they can pick up my book on my website. It's called Blueprint to Your Best Retirement. You can listen to it on audio while you're at the gym or walking your dog, or you can buy the hardcover or Kindle. But that book is really, really simple and easy to understand. I wrote the book for like the average American. And what I mean by that is someone that works their butt off, works a 40-hour, 50-hour a week, comes from corporate, has money saved, and they've got this money and they're like, man, how can I do more? How can I have more? How can I, be in a better spot financially? But man, this financial world like really confuses me. Like my financial advisor, like I barely talk to him. And if I do talk to him, he just wants to invest my money. And like, I think he's doing the right thing, but I don't know. Like that's you. If that's who you are, this book is for you. So you can pick up the book and it'll teach you how to access your retirement account penalty and tax free, how to earn tax free money through a Roth. And I wrote it from a standpoint of just keeping it super, super simple, really easy to digest, easy to connect the dots. It's not going to be intimidating. So that book will be, something that you can take and immediately, have some action behind it. And then on the website as well, I've got a podcast called How Winners Win. That podcast is about sharing what I shared, some of the things here in the financial space with you, Shannon. But I'm a real business owner that is trying to figure things out. Right, being an entrepreneur, you're dealing with cash flow stuff. You're dealing with whatever problem you're dealing with. Right, like we're all firemen, firewomen at the end of the day. Like there's always a fire that's got to get put out. So I just kind of share some of my journey and what's working, what's not working for me in business, and then how to win in your personal life too. So you can feel free to check out the podcast there. And then if you're one of those people that that has a retirement account and the idea of accessing it penalty and tax free to fund the business, pay off debt, et cetera, appeals to you, there's just a link there that you can fill out some information and someone from my team can reach out and see how we can best help.
Wonderful. Thank you for all that. And I'm sure we'll have all those links in the show notes. Make sure we have that included for everyone. So I love to ask our guests a couple of maybe 3 rapid fire questions that we do at the end of the show. I think it's really fun and it sparks a little bit of conversation. So number 1, what is one investment that you currently can't live without?
So that's a really good question. I would say the gym. That's my happy place. That's my sanctuary.
I love that. I'm a fitness professional of 8 years myself, and I'm pretty much the same way where I'm going, that's kind of my like sacred place I can go. It's my therapy room.
When I had COVID, I couldn't go, obviously, and I was out for
Oh,
like 2-3 weeks, and I was in a funk. Like I missed the gym, so that stunk.
yeah. It gets you mentally too. After you're physically ill, and then it's like,
Yeah.
oh no, it's like permeating into my brain now.
It like zapped my ambition. Like it
Yeah,
just, yeah.
I feel for you on that one. What is one thing that you learned about money that turned out not to be true?
Um, don't be in debt. I think we can thank Dave Ramsey.
Yeah, this is a safe place to talk about Dave Ramsey's philosophy.
Okay. I'm like, man, I'm either gonna piss your listeners off and
No,
they're
it's
not gonna
fine.
want. Yeah, I mean, like Dave Ramsey, he's a businessman. It's interesting, he does what he does and makes a lot of money. So I can't really talk crap about him because he's a lot more richer than I am. But I just think a lot of his philosophies are outdated. He says don't get into debt. It's like,
Yeah,
okay, well, that's interesting because a ton of companies have leveraged good debt and have turned something really, really special and created jobs and created a legacy and created financial freedom. So there's good debt and bad debt. And I was always
right.
taught don't get into debt. And that's actually not all the way true.
Yeah, and for anyone who doesn't know, Dave Ramsey has this quote that I think is really interesting and he's very polarizing. He has very solid views on something, which I respect, even though I disagree with the views. But one of them was, if you're in debt, the only time you should see the inside of a restaurant is if you work there. And I was like, oh, that seems, he's so polarized on one side of the spectrum on how he feels about debt. As long as you're in debt, you have to be paying off debt, get out of debt. Debt is terrible. Debt is a way to leverage, in my opinion. I think there's a way to use it in a healthy way. But I think people abuse it way too much. And so he decides to take that stance of every piece of debt is bad, which,
Yeah.
It's always the extreme.
Yeah.
So lastly, what makes you feel like a millionaire?
Man, right now it's the time you ask me this question will be different, next year, the year after. But what makes me feel like a baller is actually just being able to hang out with my daughter. She's going to be 13 years old this week. She wants nothing to do with me unless she needs a car ride or me to buy her something off of Amazon. But yesterday she's like, hey dad, let's watch this Anne Frank movie came out on Netflix. And she's like, she wanted to hang out with me. And like, that never happens, So having a teenage daughter, I only have one child, so I don't know anything to compare it to, but that makes me feel really successful is when, I get some parent time with her.
Yeah, as a former teenage daughter, I I can say that is pretty huge because I was the same way with my dad. I wanted nothing to do with him
Yeah.
for like 3 years. I was like, oh, dad, so boring, whatever. You know
Yeah.
what I mean? I can relate, and I'm going, oh man, that's a big step.
Yeah, it is. I'll take the wins as they come.
Absolutely, yeah. And I'm so glad that she's got you to influence her too. Maybe one day she'll listen to your advice too when she goes to start
She
her jobs and everything.
she is. That's one thing that, as entrepreneurs and really anyone listening to this, like just remember, like they know and it's not just kids, it's everyone. Like they know what you say, what you don't say, what you do, what you don't do. Like people, you're making a bigger impact on people than you actually realize it.
True, very true. So I really enjoyed this conversation, Daniel. Thank you for being on the show. And one last time, where can folks go to find out more information about you and how to work with you?
Yeah, that'd be danielblue.me, and that's danielblue.me. BLUE is my last name, and yeah, that's the website that will give you a bunch of information.
Perfect. We'll put that all in the show notes for you. And again, appreciate you being on the show. Thanks for taking the time.
Appreciate you having me here.
All right. We'll see you guys next time.